Commercial real estate is sensitive to high interest rates primarily due to the impact of the cost of financing. Now, when interest rates rise, the expenses associated with borrowing money for property development and investment increases substantially. Now, commercial real estate projects typically rely on substantial financing, and higher interest rates means higher loan servicing costs, which can diminish the profitability of these investments. And in the case of REITs or real estate investment trust stocks, across the market we have seen, and they have shown to be just as sensitive over the last year and beyond to this higher than optimal interest rate environments. Now in this video, we are going to dig deep into one of my favorite stocks across the entire market, Realty Income, ticker symbol O, and I'm going to explain why I don't think there's much time left to get into this monthly paying dividend stock before interest rates start to drop and this stock starts to skyrocket towards all-time highs and beyond. On top of that, I'm going to talk about why I've been buying more and more of ticker symbol O, and as of right now, my Realty Income shares stack is sitting at around 2,800 shares across my multiple portfolios. Now, if this interests you at all and you're a fan of Realty Income, make sure to please stick around, drop a like down below, and let's get right into it. So first things first, Realty Income's share price performance. At the time of filming this video, Realty Income is sitting at around $52.30 per share. Now it's hard to believe, but just a few weeks ago, Realty Income was in the mid 40s, and a lot of investors thought that Realty Income could possibly even go down below $40 per share. Now, even with Realty Income climbing back up quite a bit since the most recent 52-week lows, Realty Income is still down year to date almost 18%, which is why I still think this stock is offering a massive opportunity, but honestly not for much longer. Now, of course, when in doubt, zoom out. Realty Income is up 556% plus on the all-time chart, which has even outperformed some of the best stocks and ETFs in the entire world across this time frame. Now, with the way Realty Income is trading as of right now, it's still offering a 5.89% starting forward dividend yield, which is historically very, very high and one of the highest dividend yields that Realty Income has offered in quite some years. But once again, just a word of warning, a word of caution for long-term dividend growth investors like myself. I personally do not think that Realty Income is going to be trading even this low much longer, which means this dividend yield is going to go from 5.89% to maybe 5.5%, and then maybe all the way down to around 4% as Realty Income starts to trend towards all-time highs. Now, one of the main reasons on why I think most of the worst is behind Realty Income, and why I think most of the worst could even be pretty much now in the past for most stocks and most ETFs in the market as of right now. Just as of recently, we have a new report that says inflation was flat in October from the prior month. Core CPI hits 2-year low. So the consumer price index was flat in October from previous month, but increased 3.2% from a year ago. Both were below Wall Street estimates, sparking a major rally across Wall Street. Now, looking a little bit deeper into the consumer price index report, it says excluding volatile food and energy prices, the core CPI rose 0.2% and 4% against the forecast of 0.3% and 4.1%. The annual rate was the smallest increase since September of 2021. The flat reading on the headline CPI came as energy prices declined 2.5% for the month, offsetting a 0.3% increase in the food index. Now, following the report, traders took any potential Fed rate hike almost completely off the table, according to CME Group data. And speaking of the possibility of a future rate hike, which is very important when it comes to Realty Income and of course commercial real estate and of course pretty much any equities right now. The probability as of right now on the Fed rate monitoring tool, which keep in mind these are all just probabilities. This does not mean that it's going to happen for sure or not happen for sure. This is just a possibility of the future. As of right now, the December 13th meeting shows that there's a majority of a chance, a 95% or so probability of the Fed not hiking rates and leaving rates exactly where they are. Also important, looking a little bit further out in January, more of the same. It's being priced in right now that the Fed's going to leave rates alone for a little bit longer. But then what's really interesting is if we look at the March 20, 2024 meeting, we see a 73% chance that rates are going to be left alone, a 3.9% chance that rates are going to be increased, but a 22.8% probability that the Fed is going to cut rates as soon as March of next year. Now, zooming out a little bit further, of course, who knows what's going to happen, but it's still interesting enough to look at. The majority of probability shows that by November of 2024, by this Fed meeting, it shows that rates will be around 4.5 to 4.75%, and that's what the highest probability is right now. So with there being quite a good chance that the Fed is done hiking rates throughout this entire year, and forward looking throughout next year, there could even be some drastic rate cuts. Realty Income shareholders like myself are loading up on shares of Realty Income, especially locking in this decently high starting yield of still around 6%, knowing that of course, unless a massive event happens in which the market overall starts to really tank again, the worst pain from interest rates should now most likely be behind us. And with knowing that I think a lot of investors are starting to dump a lot more money into the equity markets, and you can see this across multiple different stocks and ETFs, of course. Now, even with this all being said, it's still going to be interesting to see how Realty Income plays out over the next year, especially with all the new things that Realty Income has been doing, like for example, acquiring Spirit Realty, which by no means is a small acquisition and by no means isn't going to change the fabric of Realty Income whatsoever. But even still, with Realty Income having a very well diversified portfolio of what I would like to call mostly recession-proof industries and businesses, I think Realty Income is going to be just fine over the next 5+ years, especially for longer term investors like myself. But even for some of the shorter term investors at this point, if interest rates are looking to be coming down, not really rising much higher from here, and the fact that Realty Income for the most part doesn't have much debt maturing anytime soon within the next few months or even year, I think Realty Income could be a massive opportunity moving forward. Now next I wanted to talk a little bit more about my plan with Realty Income and the fact that as of right now with around 2,800 shares of Realty Income through my portfolios, I'm currently earning over $700 a month in dividend income. And this right here, for example, is one dividend that I received today from one of my portfolios from Realty Income of $235+. Not to mention the fact that Realty Income is also going to be most likely doing another dividend increase next month, which of course, as always, isn't the biggest dividend increase, but when you have now 2,800 shares like myself, really anything helps out at this point to get more dividend income into the portfolio. I will say that Realty Income, as far as REITs go, is one of the highest quality across the entire market in my opinion, and this is due to things like the massive client diversification, the fact that Realty Income has 13,100 commercial properties and are leased to over 1,300 different clients. So even though Realty Income, of course, is a single stock, it's not an ETF, it still is rather diversified, and diversification is definitely key. Because for example here, let's say a few of these top 20 clients, let's say Dollar General or FedEx, might have some issues in the short term, let's just say. The idea of diversification is that hopefully the rest of the other companies that Realty Income leases out to would hopefully be able to pick up the slack. So for me personally, while Realty Income is still trading in the low 50s as of the filming of this video, which who knows where it's going to be in the future, I'm still going to be grabbing more and more shares, locking in a nice high starting dividend yield and holding these shares hopefully forever. But now I want to hear from you guys down below in the case of Realty Income and the possibility of interest rate hikes being a thing of the past now. Do you also agree that Realty Income could be a massive opportunity and agree that we might not see Realty Income in the low 50s much longer? Comment yes or no and let us know why. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.